So trading is winding down for 2018, and I know that many of you have plans for the Christmas break, and you'll probably keep your trading computer shut off until the new year. Look, taking a break from trading is healthy, and you can do a lot to refresh yourself for any trader that interacts with the market on a daily basis. Now, during the break, though, it's also a great time to be thinking how you will manage to get back into the swing of things when you come back to trading. Look, vacations end, and just like when you come back from a workout routine after you took some time off, there are some pains along the way as you settle back into the markets. Now, the number of times in the past where I've ended up having some pretty terrible days off on the back of taking time off is not something that I'm proud of. But life and trading, they're there to teach us. And until we learn these lessons, they're going to be relived time and time again. So if you recognize that this has ever caused even the slightest of issues for you, you have to decide on what to do in order to mitigate the risk of it happening again in the future. Trading is a business. And the problem is that so many important aspects of trading are not exciting. If you're anything like me, I'm sure that after coming back from vacation, you're looking forward to get to trading again. And with all the distractions, it's really easy to overlook the work that needs to be done, and instead you just start taking trades. But if you're going to treat trading like a business and stay in the game, you're going to need to pay attention to these sort of details. Why do you think businesses have performance reviews? Is it because they like to extrapolate all the money that they're going to make? Or is it because important information about relative performance expectations, the state of their business and market conditions, can be gleaned, which may in turn help them to address weaknesses and plan for the future? It's probably not the exciting side of many businesses, but it's necessary. Getting yourself to the level where you can trade effectively is not a party. Now, everyone's slightly different, so you have to look at what you're susceptible to, because there's no one size that fits all. There are a few areas of risk that I know are a problem for me, and I'm sure that others will be in the same boat. And the first area that I know that traders naturally suffer from is diminished contextual awareness. That's to say, what is the current technical condition of the market, what fundamental events have taken place, and what is the overall mood of the market. Next, I would put up my routine and plan following. Now, some are much better than others at picking up where they left off as far as how they approach trading. But for me, I'm at my best when I'm in an unbroken string of days where I can really get into the markets and build up some momentum to my performance. Execution sharpness is probably going to be an issue depending on how long you've been away for. So after you understand what the potential issues is for you, you have to be careful and diligent as you work your way back into things. Now, I'm not saying that you shouldn't trade or you should trade smaller, although this is an option. But if you're thorough in the way that you go about it, there really should not be any need for that. What you definitely should be doing, though, is going back a week or so before you left and rerunning your charts bar by bar until the day that you got back. And you can do this pretty quickly and just take a few notes on what you see. Look at economic releases for the times and check to see if there was any major news and how the market reacted to it. And this can help you to get back in sync with the markets and how they are trading. Reread your trading plan. Simply reminding yourself of what your trading is about, it helps avoid taking those non-authorized trades. Taking special care in your preparation, logging your trades, those can help show you how effectively you're executing and following your plan. And as far as sharpness and execution goes, there are a few things which could help. Now, this could be an argument for going back to the idea of trading smaller for a short period until you're confident that you're up to speed. Visualizing a number of different scenarios. Breaking down how the trades happen from a mechanical perspective is another useful exercise. But also being humble enough to acknowledge the possibility of it being a problem can make a big difference on its own to help you focus. It only takes a few bad trades here and there to really impact your bottom line. But when you also consider that these avoidable errors can be the spark that ignites a number of other psychological issues, the motivation to avoid them should be pretty strong. So the suggestions that I made for doing so can be good advice in general. Making sure you're doing things properly, maintaining quality control, They're always going to be important, although probably more so than ever when you just get back from vacation. So make sure that when you do get back, that you ready yourself for action and you don't leave your mind sitting on the couch or at the beach still enjoying the break.